Breaks down to the downside. I don't think anybody saw that one coming. We make a new low. Now, where are we at? We're still at the median line. And in fact, look at all the times we've come down to this median line, and yet we're not closing below it. It keeps bouncing back above it. We need to make some progress below this median line if this is going to turn into a rout. Maybe. He's saying it's a head fake. So what do we think? Higher or lower from here? Higher? Lower? Consolidation. One consolidation, two consolidations, three consolidations. Okay, ready? Inside bar goes nowhere. Doesn't tell us much of anything. So now the question you have is this. Was that the head fake? People got short in the bottom, and are they about to get shagged out? Or are we about to break, have the big breakdown now? You think there's more shakeouts coming? Higher? Lower? It's split. Okay, ready? Congestion, and we break above the triple tops. So obviously, the people that got short in the hole just got it in the you-know-where. They're chasing their tails, right? And we don't want to do that. We want to look for a high probability setup. Well, I'm not going to ask you to verbalize this, but let me just ask you a question. Take a second and look at the chart in front of you and think about it this way. Can you visualize in your mind what a high probability setup would be here, whether it's long or short? You don't have to tell me what it is. Just stop and think about it for a second and go, you know, if it did this, I think I'd be willing to do whatever. That's what you should be thinking. And if you're really good, you should be thinking about both sides. If it does this on the upside, I think I'd be looking for this. If it does this on the downside, I think I'd be willing to do this. Because we're getting close to a moment of truth here. Everybody there? Yes, sir. Yes, the mirror bars, yes.
In your mind, you say something significant is going to happen, there's a behavior change or something, watch out. Did that occur for you?
For me, what happened is you saw the flush in sellers. Everybody had to get into this market. We made the run down. We tried to blow through the median line, and we're unable to. And this flush back up tells me, especially when we took out the mirror bars, that there's significant buyers down there and people are caught short. That's what I read into it. Now, I could be dead wrong, but that's what I read into this. The mirror bars told me, if I have a position on, you better make sure that your risk is what you want. Now, I don't have a position on, so I don't have to tighten my stops. But if I had a position on, and when I see mirror bars, the very first thing I do is go, do I have the right risk profile that I want? Yes, sir.
What is the psychology of the mirror bar?
It's actually not, it's not a psychology in the sense that other people are looking at it so they're paying attention. To me, it shows a market that's in the same range. It's in balance, but you've got buyers the first bar, and then you've got sellers the second bar, and yet they're still tugging at each other. You know, this has a negative connotation, unfortunately, and we're now in a politically correct world, but I have no other better way to say this. It's a Mexican standoff, and if you have another word for that, you know, we don't know. The gun's at both people's heads, but we don't know who's going to win, but somebody is about to win here. No, because, see, the reason why I wouldn't equate it with a doji is because there's a lot of people that are looking at the doji going, oh, this is important. People aren't looking at these mirror bars thinking about them. This is just a sign in the market that I look at. And I guarantee you, if you polled 10,000 market professionals, it's probably me. So, you know, but most people know about dojis. So they're almost self-fulfilling in a certain sense. People go, oh, look, I got a doji here. You know, so I don't think there's anything attached with this, so to speak. So I don't think it's not carrying any baggage, if you will, or any good or bad implications. To me, it's just a sign on the road. All right, so we come higher. For those of you who thought the rally was going to continue. Now remember, we have never got to this upper median line parallel. And all this time, and it's been I don't know how many hours at this point. If you're thinking about the upside, and I am at this point, I'm wondering if it gets up to this upper median line parallel, do you think I'm just going to put my order out there in the middle of blue? Just lay it out there and say, go ahead and... Anybody like that idea? What? Not a chance. Why? Where's my stop? Also, I have no idea if this upper median line parallel is going to work or not because it hasn't been tested. I want to see what price does when it gets up there. Anybody have a watch? Tell me where we're at.
857.
Oh, I better hurry. Okay. We come up and test it. We close below it. Okay, I like that. That's good. But I prefer to see another bar. That's not enough for me. Here's my second bar. Now I get 2 closes below it, and the second bar has what I call great separation, because look how far up we came up. We ran the stops above it, and we're closing nicely down here. This shows me that there's good sellers. I'm more than willing now to sell this upper median line parallel. But wait, I'm going to give you another trick, because I'm cheap. Ready? This is the first time we've got 2 bars in a row that give me the same signal in this entire schmear. They both say that they're sellers up here, so I do want to get short, but I'm cheap. I could just sell the retest at 123.57 with a stop 5 to 7 pips above here, and then get a profit at the median line where he was trying to talk, okay? But how about this? I draw a sliding parallel the first time we come above, and I just lay it out there. And I'm not going to move it if we break above it. Now, if we break and close above it, I'm just going to give up on the idea. But I'll draw that first sliding parallel. Has the same slope, comes off that extreme. If price gets up there, I can trade up there. My stop will be smaller because I'm cheap. And I expect price to get up there. That's a measurement that the median line has shifted. Okay? So let's take a look. I'm not ready to trade yet because this sliding parallel has not been tested. It needs to be tested. I need to know it's going to hold, right? It comes up, it tests it, it does go a little bit above it, but now look where it closes. Closes nicely below the upper median line parallel, and certainly well below the line it tested. Now I'm willing to trade off that rascal, and my stop's going to be 6 pips smaller. Now, 6 pips may not sound like a lot, but it's $60 a contract. That's a world of difference, especially if you're trading in one lots. So I want to sell, instead of 57, I want to sell at 123.63. My stop's going to be at 76. My profit target's all the way down at 122.98. 88, excuse me. Oh, 98, yes. All right, price comes up. I'm doing the non-aggressive one. I'm up at 63 here, right? The aggressive one to sell at the upper median line parallel gets filled. I wasn't in for that one. So I'm sitting with my buddy holding his hand going, well, we didn't get filled on that one. I measure my cursor down and I go, let's move my entry order down by 1 pip and see what happens. Maybe I'll miss this train. But at least I spotted the entry, right? Well, price comes up, I do get filled. And look at the separation on this rascal. If you're short now and you see that close, this is very good. And in fact, actually, when you see this, you should probably go to break even at this point. Up or down from here? Anybody got up? I got one up. New lows, triple bottoms. We're consolidating. Now, what's important? Where we come out of here, right? Note one important thing. When you trade with the trend, you have a 10% edge. If you don't know that, you just learned that. And that means if you're trading against downsloping lines, statistically, you have a 10% edge. So trade with the trend, my friends. Don't buy against downsloping lines. Don't sell against upsloping lines. It's called getting collared. Take that 10% and run. So we want to know where the triple tops or triple bottoms get taken out here, this energy coil. Also note that I moved my profit target down from 98 to 87 because this line is sloped. The longer I'm in this trade, the more I'm going to get paid because my capital's at risk. I've got it sitting out there in both hands. If the market blows up, they're going to come and take my money. Well, if I'm going to do that for some period of time, I'm just about done. You need to get paid, okay? Price comes below the triple bottoms, I'm all good, right? Higher or lower? Higher? Thanks for the vote of confidence. Lower? Okay. We come below the triple bottom. So far, it looks like it's doing everything. Again, look, I moved my profit target. Every time, I just run my cursor down and move my profit target. Next bar. Done. I'm happy. He's happy. He saw 3 trades. Now I can literally say to him, hey, you got to work harder. There are trades here. You just got to roll your sleeves up and look for them. You have to pay attention to each bar. Cancel your stop. Cancel all your orders. Make sure that you sold and bought an equal amount. You're good. If you have questions, I'm late. I'll answer them in the hallway. Thank you all for taking time. I hope it was interesting.